Yeah, this is our second shelter in cave warning. We had one after first quarter when we were above consensus first on deliveries and then following that on earnings. This quarter, we're actually looking for positive gap earnings, which would qualify for S&P. And frankly, despite our long-term differences on valuation, that especially in a market like we have today with the tech stocks, that's hard momentum to fight. So hence, stay in your caves.
What is the fundamental bear case thesis that you have, Brian? And I'm wondering because so many of the bear points have sort of faded. I mean, the worry about cash burn and the ability to access capital, that seems to have largely disappeared, and that has always been a major tenet of the bear case.
Yeah, no, it's really what do you value a company that's primarily, despite some of its other businesses, an automaker, what kind of margins can it make 4 or 5 years out at what kind of volumes, and then discount that back.
Okay, and so how do your forecasts in terms of volumes differ from what they're forecasting? They've been able to hit most of their targets, at least for the past few quarters.
Well, we think, in our valuation for 300, we're using about 700,000 units at a little bit better than industry average margins. To get to where the stock is, you'd have to assume it could be several million units at margins 2 to 3 times the mass market industry, and even above what luxury car makers have done. And where we disagree then with some of the other assumptions is we don't think there's a big robotaxi business, at least in the next several years for Tesla. We're skeptical of the energy business. Yet, in terms of where the momentum can go, the short-term data points off of what I would say would be lowered expectations are in fact beatable, and that drives momentum.
Brian, one wild card that you haven't brought up is the company founder. There are plenty of investors, I'm sure, who are, quote unquote, betting the jockey. They're investing in Tesla because of Elon Musk, not necessarily the business itself. And that's a pretty powerful motivation for a lot of people, isn't it?
Yeah, it's, again, why we're not fighting it short term at all. We think the reckoning, if there is going to be one, could be more when we get to second half and fourth quarter. When if this were a real growth stock, we'd actually be talking about things like same country, same model sales. And so if you back out China from this quarter, back it out from a year ago quarter, the rest of the world shrunk 28%. Now, of course, there's COVID, of course, there's challenges, but that isn't that different from many of the legacy automakers who sum them all together and you barely get Tesla's market cap for many of them.